All right, so that's the new listing. We have the Ravi Dharamshi now joining us, Chief Investment Officer at ValueQuest Investment Advisors. Ravi, it's a pleasure. Welcome back on CNBC. Thank you very much for your time. Prashant this side. You know, I have to say at the outset that I hope you will talk about one name like Mazgaon today, like the last time you were on the program. And what a run, boy, it has had. I mean, amazing.
Prashant, it's just pure luck. There is no way that anybody could have predicted the kind of run. So, we try to analyze the opportunity top down and see if bottom up, which is the company that is going to ride the trend the best way. So as we spoke the last time around, we are very bullish on the defense as a sector. And within defense, we are very bullish on Navy and Air Force. And these are the two service arms of the government which are going to spend more than $1 what is going to be allocated to them in the budget. So and there are very few players that can address that kind of opportunity. So once you are sure which is the area that you want to bet on, whether it is the aircraft manufacturing or the ships, or whether you want to bet on arms and ammunition, what kind of things that you want to bet on, then it becomes very clear which are the players to bet on. It's not like there are too many players available out there. So now suddenly this is actually a birth of an industry that is taking place. The private sector is for all purpose till date non-existent, and now it is going to take birth. So, but for the next 10 years, it's going to be the public sector defense companies that are going to mint the most of the opportunity that lies ahead of us.
Okay. Hi, Ravi. Good afternoon. Thanks so much for joining in. Ravi, well, you've got that defense call bang on. You know, everyone's talking about defense. In fact, earlier today, we spoke to the management of HAL as well. And they are one of the rarities that we have. They go ahead and upgrade their margin guidance. That said, though, there were a couple of sectors that you're a little bit cautious on. The IT pack and pharma. Do you stick to that view? Or do you believe that it's gradually coming into a zone that maybe you'll want to start chipping in?
Hi, Nigel. Good afternoon. No, we continue to stick with that view. And I'll tell you where the view is flowing from. So we do have a negative view of what's happening in the world. Unfortunately, or it is negative for the outward-facing sectors like IT and pharma. There are, of course, other challenges that the sectors face. For example, pharma, there is a huge consolidation of buyers. So there is a structural shift of bargaining powers towards the buyers as against the manufacturer of the product. So pharma is facing a constant challenge of reduction in the pricing going forward. Now, IT, again, IT is a case of more, post-COVID kind of one-time demand that propped up the order book. And see, this is a large, mature sector. IT services are commoditized and a large, mature sector. One has to be very clear that this sector cannot grow at more than 10-12%. If a stock price is factoring in 25-30% kind of a growth at the peak margin, then one needs to be careful about it. So it just needs to be some recalibration of the valuation that is required. Otherwise, IT services sector will continue growing. And within that, you can probably find one or two companies that can grow higher than the market at 15-20%. But those are more rarity and not an across the board kind of a thing. So near-term headwind in the IT sector remains with the kind of churn that we are seeing at the headcount level. The demand is slowing down. There are layoffs happening in US. US market overall is slowing down. So it's prudent to be watchful from the next 1 or 2 quarters point of view. Let the valuations correct a little bit more. At what point of time one can reevaluate it again.
Ravi, just want to get back to the point about, defense and public capex. Now, when we look at public capex, the understanding in the market is that the road capex has played out over the last, couple of years. Defense is now well recognized, but the next thrust of government spending perhaps could come in railway-related stock as well as railway infrastructure. And we're already seeing so many of these railway overhead bridges, getting renovated. And the railway stocks have already run up in anticipation that the government is going to be spending big on railways. That's going to be the new area of focus, especially perhaps when the budget comes. Now, the problem is the stocks have run up, and in the past, we've had multiple cycles in which these stocks have done well, only to come back to perhaps even lower levels. So there is still some element of disbelief and skepticism in the market when it comes to PSU stocks. What are your thoughts on these railway infrastructure stocks, which are doing exceedingly well right now? Some are saying it's an up cycle, some are not convinced.
So, hi, Reema. Absolutely correct. You hit the nail on the head. that these finally see these are all B2G businesses, and one needs to be a little skeptical in extrapolating into the future. Is the order book visibility there for 3-4 years time? Like in the case of defense, the order books are already built for the next 3-4 years. So the quarterly performance is going to depend on the execution and maybe some raw material variation, but it is not going to be that growth is not going to come through. While in the case of railways, that kind of visibility is not present at this point of time. Having said that, overall, I am also a believer in the railway opportunity. However, there are very few direct plays available, direct beneficiaries of the trend. Most of the money getting spent on probably the railway redevelopment, or whether it is the what is this bullet train kind of projects or metro projects, and those kind of that opportunity does not directly affect in the stock market. So that is a challenge of the railway sector, I would say.
Right. No, got that. Ravi, we financials is a space you continue to like. We had Macquarie earlier today writing a note, kind of sort of introducing Jio Financial Services with some details of what they expect this entity to be able to do, how it poses challenges to incumbents like Paytm, but also Bajaj Finance. Any thoughts? Have you thought about this in any way? What this could mean? Any thoughts at all? Yeah, go on.
So, Prashant, let me tell you that finance is the most exciting space in India today. Overall, the economy is going from $3.5 trillion to 7 trillion, 10 trillion over the next decade. And if that was to happen, the overall credit to GDP ratio, which is roughly at about 55-60%, will go to more than 100%. So the overall credit in the system is going to grow exponentially over the next decade. Having said that, there are very few large companies that can actually, kind of absorb that kind of growth. I'm sure there are smaller companies that will also do well. But so from overall finance perspective, I am very bullish on the space. Now, coming to your specific question about the fintech. So this space is absolutely ripe for disruption, because there are complacent, incumbents out there who are not paying attention to the changes that are happening on the ground. The new age customer definitely is going to gravitate towards these new age fintech companies. So of course, it's a long journey. It's not going to happen overnight, but these things happen slowly, and then suddenly all of us, it happens. So, but right now, I feel the business models are not yet very clear. It is still a more payment related disruption that is happening rather than lending related disruption. What I mean is that all these fintechs are not yet building their own lending book. They are only procuring clients for the existing banks or NBFCs who actually have the balance sheet to take that kind of risk. So these fintechs need to move from just acquiring clients to actually doing the credit check and lending the money of their own. Once that happens, then the whole space would have graduated, and then really the disruption risk arises for a lot of the incumbents.
All right, Ravi, before we let you go, we spoke about defense. I recall in the past, home first finance was something that you were bullish on as well. And the stock has done pretty well from there. So I wanted your updated view on that one. And what's new? I mean, what's the new, stock that you're looking at, or sector that you're looking at? You're done with defense. You told us your cautious stance on IT as well as on pharma. But something new for our viewers?
Yeah, so first coming to, so you know what, I will not name any company, but overall in the finance space, I can tell you that we are very bullish on the housing finance, and within housing finance also we are very bullish on affordable housing finance. This is the only segment left where you can actually still make spreads of upwards of 15-16%, and where the cost of funds overall for the companies are probably still falling, or the ability to absorb the increase in cost is far better. So this is the only non-commoditized space. It's still high touch, a lot of penetration still left to go. Housing overall has a long runway. So affordable housing finance is a segment that remains attractive, and there are some 3-4 quality names out there. Without naming any, I continue to like the space. Coming to what I would like, again, I'm not going to name any company particularly, but I think this new sector that is emerging. See, we are very, very bullish on manufacturing for the next 10 years. I would believe India is going to go from 12-13% manufacturing contribution to GDP to maybe 20 to 22% kind of contribution over the next decade. It is a very unique situation where Indian entrepreneurs are actually getting protection from competition from China, as well as they are getting a ready market where the kind of imports are getting banned. So defense actually is also a play on that manufacturing theme only, but it is one particular niche. The other place in the two areas which we are very bullish on manufacturing is one is this electronic system design manufacturers. That there's a new space that is emerging. So if you were to actually, it is very easy. If you look at the PLI schemes and the way it is designed, you will understand that these are the spaces that one should be looking at to understand which is the space that is going to do well. Once you see PLI scheme being implemented and getting traction, that would definitely throw a big global leaders from the space. So that is one space that excites us. And the second space that, well, it does not have too many listed entities available, but is the energy transition. Energy transition, I believe, is a theme that has passed the inflection point. It is going to gather momentum, and it is going to gather momentum in a big way. A lot of companies are going to hyperscale over here. The backbone of energy transition is going to remain solar. Of course, there will be a wind play also available, and there will be other technologies also coming through, whether it is EV or batteries. But solar remains a large pool. Hydrogen is probably still a few years away before it becomes a mainstream technology that has crossed the inflection point. So at this juncture, I believe solar is one opportunity that is going to pick up in a big way. But unfortunately, there are not too many companies available in the space to bet on right now.
Ravi, great conversation. Thank you very much for joining in. By the way, there has been a pickup in the markets. We're at the high point of the day. The Nifty, when we started closing bell at 2:30 p.m., was up about 50 points. Right now, it's up close to about 80-odd points. The mid-cap index has seen a sharper recovery in the last 15 minutes of trade. And one of the key contributors on the way up has been the IT index. The Nifty IT index is now up close to about 0.8%. In the large cap space, it's TCS, Infosys. In the mid-cap space, you've got names like Emphasis, Latent View. These are stocks which are batting for the bulls right now. So some pickup seen in the markets. Let's see, we've still got about 20 minutes of trade left. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter.